Hello, my fellow investors. In this video, I'm going to analyze LL Floorings. It's right now it's trading at around half of its book value. It's a very interesting story. What happened in the past 10 years for this company? As we can see over here, before COVID, it was like down to $4. After COVID, it went up to $30, and it was just a downtrend for the past 2 years. Actually, we could see in the last week or so, it had a pretty strong run up from $3 to $4, but that's just the last week. It's a very interesting story, and it's a very interesting prospect. Some good stuff about it and some bad stuff about it. It's a very interesting company. I just want to say, right now it's trading about less than half of its book value. The company has no debt. It has a very interesting business model, which is very complicated to understand if it's working out for them or not. And so let me get into it. We'll start one by one. Okay, so I want to start off my analysis by trying to understand LL Flooring's industry business model, and then we'll go on to all the other things like understanding the numbers and everything else. But let's start off with the business model. So this is LL Flooring's website, and as you can see, all their products are wooden. You have here waterproof, it's wooden, vinyl, hardwood, hybrid, resilient, all these things, cork, bamboo, even tile. It's not stone tile, it's all wooden tiles. So that's one thing to understand, is all their products are wooden products. They don't do any carpets, any stones, any ceramics, anything else. Everything is wood. All different kinds of wood, but everything is wood. And now, another thing that should be very important to understand is their, what they call, picture it, floor visualizers. So this, I think, is something that they have. They're way more ahead of their competitors, is they're part of the e-commerce, but we'll get to that soon. So, as you can see over here, this is their last 10K. We can see all their products, all the mix of the products. So you have manufactured products, is the sales of 537 million, solid and engineered hardwood, 261 million, molding accessories, 159 million, installations, 152. Everything is wood. There's nothing over here that's stone or copper, anything else. You can also see over here in this 10K, so right over here, in addition, hardwood flooring competes against carpet, vinyl sheet, vinyl tile, ceramic tile, natural stone, whatever. If consumers' preference shift towards types of floors covering that we do not sell, we may experience decreased demand for our products. So one thing is to understand is they're only in wood. All different kinds of wood products, but everything is wood. Now, their store model, that's another thing to understand. They're totally different than other competitors. Over here, as of December 2022, we operated 442 retail stores. Remember this number, 442. And although we have certain criteria that we require for every new store, we are able to adapt the range of existing buildings to our format, including freestanding buildings, strip centers, or small shopping centers. Our stores are typically 6,500 to 7,500 square feet. We enter into short leases, generally 5 to 7 years. Okay, so they have small stores, 6,500 to 7,500 square feet. In the beginning, in 2008, they had more like 6,000 square feet. But what they don't say over here is the size of the showroom. So the stores are typically 6,500, 7,500 square feet. But out of that, almost entirely everything is a warehouse or whatever you want to call it. The showroom itself, where the customers can visualize the products, is much smaller. So they don't write over here the size of the showroom. If you go back a few years, this is from 2010. So over here also a little bit smaller. We 6,000 to 7,000 square feet with approximately 1,000 to 1,200 square feet dedicated to the showroom selling area. And in the beginning, it was even less. It was 800 square feet, and then it went up to 1,000, 1,200. But more or less, that's the size. I'll show a video how this store looks like. And again, this is something very important to understand. With our significant brand marketing, we believe our store locations are a must-visit destination for customers shopping for floorboarding. Our stores are typically located in industrial or commercial areas that have lower rent than traditional retail locations and accessible for major roadways, whatever. So they're not looking to be in malls or in such kind of places. They're looking to be in industrial places, commercial places with a lower rent. So cheap rent, lower expenses. And on the other hand, they're not like in the middle of town. So that's a plus and a minus. So that's the size of the store. And now employees. So over here, again, they stopped writing this in the last years. I'm going back to the first report, 2008. A typical store staff consists of a manager and 2 to 3 associates. So a typical store is in between 3 to 4 employees. That's it. You have the manager and 2 to 3 associates who can help the customers. And in the later years, they don't write anything how much is a typical store, but I calculated every single year. It's more or less the same thing throughout all their, since they were public, it's more or less the same thing. It's a very easy way to calculate it. Let's say this is the 2022 10K. So we have approximately 2,300 associates, 98% of whom are full-time employed, whatever. Of these associates, 72% work in our stores. So if we make a simple calculation, how much is 72% out of 2,300? So it comes out to 1,656, divided to 442 stores, like they said. So it's 3.7 employees per store. It's more or less, these numbers are constant from 2008 until 2022. It's the whole time it's around 3.5, 3.7, 3.8 employees per store. So their business model of how many employees they have per store doesn't change. And it's also something very, very important to understand. A normal customer would come in to the store, is not going to get a lot of help. I mean, it's a small store. If 10 customers come in, they're stuck. You have to have a small store, which can help a few customers each time, and nothing more than that. So how are they generating sales? So this is very important to understand, the sales approach. We strive to have an integrated omni-channel store model, sales model that enables our stores, customers, contact centers, digital platforms, and catalogs to work together in a coordinated manner. So basically what they're going, you can read it the whole in the 10K, you can read everything. Basically what they're trying to do is to be e-commerce that has small brick and mortar stores that can, people could come in and see it. It's not something that people like to buy online. So they want, they're going for a kind of a business model where people are going to do most of the research and everything online, and they'll get all the help they need. They have the call center. I don't know how many people work in the call center as of today, but in the beginning of in 2008, 2009, there was like 50 people working in the call center. Even if it went up, that's their business model. People do extensive research online. They figure out more or less what they want online. And if they want to come and see actually how all the product looks, they'll come into a small store, the small showroom. They'll get more or less everything they need. So that's their business model. And it's very, very important to understand this business model, because I think this is probably the biggest problem the company has. So I'm just starting over this business model, and I'm going to continue on to analyze all the numbers and everything else. And then we'll go back, in the end of the analysis, we'll go back to the business model and I think the problem is with the company. Okay, let's just see a short thing of Floor Decor to see the difference between Floor Decor and LL Floorings. This is Floor Decor's website. You see you have your tile, stone, wood, laminated vinyl, decorated fixtures. As you can see, they're not only wood, they have all different other kind of things. And accessories, you have everything. You can see some of the video to see the difference between the two stores. They have a lot more. And what's important to understand between the difference in the business model is, you can see over here, this is from Floor Decor's last 10K. Our warehouse is formatted as 79,000 square feet. That's like 10 times bigger than Floor Decor. And their business model is totally different. They want customers who are coming into the store, they can see these fancy, huge, big showrooms, and they have a ton of employees. We'll get to those numbers soon. The difference between how much employees per store in a Floor Decor versus how many employees in a store in LL Floorings, it's totally different. A totally different business model. They more or less want people to come into the store and get really excited. They see the things, everything is mind blowing, and you have all these designers and everyone speaking to you, and that's their way. Then their e-commerce is way, way less than LL Floorings. You can see, even go on YouTube or look for Floor Decor's videos. You can't find anything. Go on Twitter. I mean, LL Floorings, their social media presence is way, way more than Floor Decor's. It's not even anything near one to each other. And on the other hand, their stores, they have much less stores. They have huge stores, but they have much less. I mean, they're a younger company, but they start off with less products. And you can see that throughout the years, the products grew much more. Now they have 4,400 SKUs. They're growing slowly but slowly. But it's a totally different business model. It's bigger stores and bigger everything. And you can see, I wanted to see the numbers of the employees. Let's find it. here. As of December 29, 22, we had 11,985 employees. That's, how much is it? 5-6 times more than LL Floorings, and they have much less stores. LL Floorings has 450 something 442 stores. They have like 160, something like that, 170 maybe. So it's a totally different business model. Huge stores, a ton of employees, a huge showroom, and but much less on the e-commerce. Okay, now if you want to see the difference between LL store and a Floor Decor, I'll just show you something short from YouTube. Here's a LL Floor store. I just want to show you, this is the showroom. That's more or less the size of the, you have these small little planks, each one. Again, you can see over here, each plank, these weeny little things. That's more or less the entire store, the showroom. Now here is Floor Decor. Just a small little thing, just see the difference. It's a random video from YouTube. I just checked it up. You can't find any LL walkthrough. There's no walkthrough to do, it's so small. This is a Floor Decor. 80,000 square foot store versus a 1,000 square foot showroom. Okay, so I just want to go through the numbers from LL in the past since they went public. Now, there's nothing really to analyze over here besides just giving the history of the company. Because over here in 2006, they had $232 million in total revenue and $12 million in net revenue, and their margins are 3.8%, and their gross margins are 33%. As you can see, from 2006 until 2013, everything was improving. Their sales went up from $332 to $1 billion in 2013. Their margins were improving 33%, 34, 35, 35, 37, 41. Then it started going down. Again, also their net revenue went up from $12 million all the way up from $77 to $77 million. Now, from 2012, let's just see the difference from 2012 to 2013. Their margins went up from almost 38% to 41%. That's 300 basis points. But it's not crazy, but it went up very much. And so we're going to get to this whole thing, what happened in 2013 and how did it go up so much. And you can see afterwards it went down. But the net revenue went up from $47 million to $77 million. That's a little bit more than 50% in 1 year. Yeah, 64% it went up in 1 year, which is very much. Didn't double. And we can see also the earnings per share went up from 56 cents all the way up to $2.77. Book value went up from $2 to $10. Everything is very nice. And you can see over here from 2013 and on, then something hit the fan. You can see over here, their sales started going down from $1 billion to $978. The net revenues went down from $63 million in 2014. They lost 56, 68, 37, 54. And basically until COVID hit, they were losing money every single year. They earned for 3 years, 2019, 2020, 2021. 2022, they went back to losing money. And you can see the book value in 2014 was $11, $8.87. Still didn't go back to where it was. Earnings per share $1.40, $2, which was the height of COVID when everyone was buying this free money all over, $2.10, and in 2014 it was $2.31. And I could go all the numbers. I mean, this is basically nothing really that I could do the numbers alone. There's nothing really that I can show over here. And you can see the assets went up, but the good thing about the company is the debt. In the beginning they paid interest in the first few years, but again it was right away. But they never had debt. Even from me, they never had debt, and that's a big thing about cigar butts. If you find a company with no debt, then as Peter Lynch says, you have to win some crazy award to go bankrupt without any debt. And I don't know exactly what they were paying interest on in the first few years, but they never paid interest from those. Besides those few years, they never paid interest afterwards. So even that they have in the books, they write here debt. It's not actual debt. It's like a credit revolver that they could loan, but they never paid interest. That's what they in their 10Ks. They never paid any interest. So that's a good thing. They don't have any debt until today. They don't have any debt. So that's something good. Again, even in 2022, they opened up a some revolving credit revolver something, $72 million, but they didn't pay any interest. So that's a good thing about this company, is they don't have any debt. Now, let's go to the more interesting numbers. You could go over everything, but again, it's not just for anyone who didn't do any of the digging in, so I'll just go into it. We go back to the beginning, the turnover ratio. The turnover ratio, you could see in the beginning, 429%. Again, 375. The company, although it was growing, you could see soon how much it went up. And in the beginning, they had 116 stores that went up all the way to, even till today, they're still growing the stores. But you could see they became less and less efficient. The turnover ratio, which was 429%, 375, 354, 262, 261, it's going down the whole time, 200%. Sometimes they have good years, but their turnover ratio is way, way less than what it was in the beginning. Sorry. Again, the big numbers that we can see over here is the stores. They had a few years they started opening up in Canada stores, and then they closed them all down. So they had 1 year they opened up 7 stores, then it was 9 stores, then nothing. They closed down 1 store, and then a few years ago they closed up everything. They closed all the stores in Canada. But the total stores is every year it's growing, every single year, the total stores. And let's get to the employees. How many employees they had. So again, you can see here in 2007, 670, 788. The very little employees. They don't have a lot of employees. You can see a company that went up from 116 stores to 442 stores, which is triple the amount plus. Went up from 670 employees to 2,300 in the last year. 2,230 again in 410 stores, which is almost how much is it? It's almost 4 times the amount. The employees, the same exact thing. We said each store is 1 manager and 2 to 3 associates. But it's not a lot of employees. They don't have a big payroll and everything else. And again, the efficiency going down. You can see sales per store. This is in dollars. If you take, I didn't do the company's numbers because I want to compare it to Floor Decor. So I just took the total sales divided by stores. You can see 3.4 million, 3.2 million, 2.9 million, 2.7 million. Again, you can see the efficiency is going down. We go over till the end, till today, 2.5 million per store. It's less than 2021, less than 2022, less than, than 2020, 2019. The efficiency is going down. And okay, you could go also average sales. The average sales is another thing. They changed it. I don't really see too much, a lot to go into. The interesting things that I wanted to show is their advertising costs. And this is the only silver lining in the company. The company in 2006 paid their marketing, all their marketing costs was 36 million. It went up to 40 million. It's going up, but the efficiency in their marketing, that's the only thing that became better. We can see it in a simple calculation is sales to ad. That means how much money for each dollar they're paying in marketing, how much are they generating sales? So in 2006 it was $9. That means for each dollar they paid on sales, on advertising, they generated $9 in sales. And this is the only thing that became better. It went up to 972, 1054, 1151, 1246, 13, 1389. Even you can see over here in 2013 and 14, which is the good years, 1325. So over here went down a little bit. And let's just compare 2013. You can see over here. This is 2013, 1325. And 2021, 18, 1698. So that's the only thing that they bettered what they were in the beginning and better what they were in 2013 is their advertisements. Their advertisements in 2022 was 65 million. That's how much they paid for advertisements, 65 million. And the first year in 2026, 36 million. So that means they only doubled their advertisement expenses in the past, 12 years. And I think that shows that their brand recognition is pretty strong. They don't need to invest so much money in advertising as they used to do once. But again, if you want to do return on advertisement, that means the bottom line, not the top line. So, of course, that it depends on if there's no revenue, so the ratio automatically will be bad. But you can see again, 35%, 27, 48, 59, 56, 52, 50, 80, 100, 76. So, of course, when they're losing money, so it's a minus. But we could see that the only thing, the silver lining I see that the company is better now than it was in the beginning, what it was 10 years ago, is how much money they need to advertise, how much money they need to spend on advertisements. But every other ratio, every other thing you look, sales per employee, sales per store, everything, their efficiency is really, really going down. And so, again, if you want to see a company, look at the top line. You have here in 2022, they sold less than $1 billion. That was the sales with their new thing, the service revenue, which they added on in the last 6 years. So again, $1.1 billion. But if you can see the merchandise they sold, $957 million. How much was it in 2013? $1 billion. 2014, $1 billion. That means they're selling today in the merchandise less than what they sold 10 years ago. So in some ways, the company isn't dying, but in some ways, not only saying there's no growth, but when you have a company that their stores in 2014, they had how many stores? They had 343 stores. And 10 years later, they have 100 stores more than that, and the sales are less, their merchandise sales are less than it was 10 years ago. Yeah, so in some ways you could say the company is dying. We don't see it in the top line, but if you actually want to see how much sales per store today compared to 10 years ago, the company is going down. The numbers are going down. Okay, now I want to compare LL's numbers to Floor Decor. So Floor Decor is a new company. Have your numbers from 2015. You can see over here, 2015, their sales, their revenue was $784 million. And just a matter of 3 years, it doubled to almost $1.4 billion. And from 2017 to 2022, went up to $4 billion. So that's a crazy growth. Now, I just want to state that their numbers are very good, but I'm not so impressed in the numbers of last year's, because when COVID hit and people got free money, and what tends to happen is people, when they get free money, they waste it. And Floor Decor, it's much more appealing to customers. You go into a fancy, nice store and you buy stuff. So we can see all over the retail industry. I mean, just compare the growth, let's say the companies like Dillard's versus Kohl's. Dillard's is a luxury brand and Kohl's is a more simple brand. It's not even comparable how much Dillard's growth went up versus Kohl's. And you can see all over the retail, all companies that like luxury brands and all these kind of things, the numbers went way up in COVID versus companies that are simple brands or usual stores. It's not even comparable. So the sales went up from 2019 to 2022, it doubled. I'm not so impressed by that. I mean, their numbers are great even before that. You can see from 2015 to 2017, their sales went up, they doubled, but it doubled in the last from 2019 to 2022. I'm not so impressed by that. I'm not sure it's anything more than COVID. But we can see over here, let's say their margins also. 2015, their margins, net margins of 3.4%, went up to 8%, 7%. You can see it's very good numbers, the margins. The gross margins are good. Is growing. Also, you can see over here from 39%, the gross margin 40%. Then not much better than what were the gross margins. And like what you can see compared to the gross margins, comparing them to LL, they're not so much better. You can see over here, their gross margins over here is 36%, but that includes their service revenue. LL, they have they do installations and they take money for the installations. That's a service. If you calculate the margins of their cost of merchandise versus the sales of their merchandise, it's more or less 40%. So in that department, Floor Decor is not very much better than LL. Maybe a little bit better, but not very much. It's more or less the same thing. Their gross margins on their merchandise sales. It's a little bit different because Floor Decor sell accessories and they sell ceramics and stones and different things. But again, you can see they're not, and their gross margins are not much better. But their growth in their sales and the net revenue and the bottom line, the net margins are much, much, much better. You can see the book value from 2017 to 2022, it went up tenfold. You can go on through a few more numbers, but that's not really what I want to do. I just want to go to the debt. So you can see over here, Floor Decor has a lot of debt. Not a lot, I'm saying. They had in 2016, $390 million. It goes down, and then again, in 2022, it went up back to $407 million. And the interest paid was going down. It went down from $12 million, $13 million, it went down to $4 million, and went back up in 2022 to $11 million. Okay, $407 million in debt versus total assets of $4 billion, that I have no problem with that. Even their tangible assets is almost $4 billion. So no problem with a debt of 10% versus the total assets, I have no problem with that. And again, I'm not going to go through all these numbers. I just want to show just a few ratios. The return on assets. Let's see over here. Sorry. In the beginning, it was 8%, 14%, 12%, 7%, 7%, 8%, 7%. Not crazy, but the return on equity, a very good number. So we had 32%, 23, 19, 19, 19, 21, 80%. The return on equity is very good. And also the return on invested capital went up from 8%, went up 16, 17, 16, 19, 50%. That's very good. And now just to compare them to LL, so we'll go to the stores. They had 83 stores in the first year when they went public, and it doubled to 190 stores in 2022. And also you can see the number of employees. They had 5,534 employees in the first year. It doubled to almost 12,000. So the stores doubled and the employees doubled. Okay, let's do it. But we could see here the efficiency. So we could see a sales per store. If we just take the total amount of sales divided per store, so it's $60 million per store. And it is going up, $17 million, $18 million, $21, $22 million. We can see they're becoming more efficient. Each store is generating more money. And you can also see the sales per labor. You can take the total employees, how much, if you divide it, how much each employee is generating in sales. So in the first year, it was $250 per employee. It went up to $355 per employee. Again, every single year it's becoming more efficient. So that means the stores are becoming more efficient. The sales per store, the sales per employee is all becoming more efficient. And now here you can see the big difference in advertisement costs. In the first year, they had $43 million in advertisement costs, and in 2022 is $104 million. So that's way more than LL. LL, what was it, $65 million in 2022, if I remember correctly? Something like that. Advertisement costs. Yeah, $65 million in 2022, and Floor Decor is $104 million. So that's a lot more. And you can see also here the sales to ad. That means, again, how much each dollar they're paying on sales, how much each dollar they're paying on advertisement, how much is it generating in sales? 24, 31, 30, 31, 36, 37, 40. So we can see over here that they're becoming more efficient. Their top line is growing, their gross margins, the net margins are growing, the bottom line is growing, their sales per store is growing, the sales per advertisement is growing. Everything is becoming better in Floor Decor. But again, it's a new company. It's hard to tell. In the beginning, it could be a nice trend. People like it. And it doesn't have to be such a big knock on LL that they're not like Floor Decor. You can see the first years of LL, they're also doing very great. But again, you can see right now what's going on in Floor Decor versus LL. Yeah, the numbers say it for itself. LL is not doing good. That's pretty simple. And so now, what we need to figure out is what happened to LL in 2013, and I'll just also try to show quite a simple picture of LL versus the entire industry. What's their net market in the entire industry? So I'll do that in the next chapter of this series on LL, and to get in what happened in 2013, and to figure out what's the future of this company. Now, if you like this video, don't forget to smash the like button and to subscribe to the channel. Thank you very much.